Naveen everyone, welcome to my YouTube channel which is Explore Yourself, Banking and General Knowledge etc. Today I will discuss about interview questions and answers related to the internal promotion examination for banks. Welcome to part 35 of my Path to the Corner Office 2025-2026 series, where I simplify bank promotion examination interviews with practical questions and answers, examples to help you climb the banking career ladder faster. Interview questions and answers from ethics and integrity in banking. Question. What do you mean by ethics in banking? Answer. Ethics in banking refers to moral principles such as honesty, fairness, transparency, and accountability that guide bankers in dealing with customers, colleagues, regulators, and society. Question. Why is integrity important for banker? Answer. Integrity builds trust, which is foundations of banking. Without integrity, customer confidence, financial stability, and institutional reputation are seriously compromised. Question. How do ethics differ from compliance? Answer. Compliance means following rules and regulations, while ethics go beyond rules and involve doing the right thing even when no rule explicitly applies. Question. What are the core ethical values expected from bankers? Answer. Honesty, integrity, confidentiality, impartiality, accountability, professionalism, and respect for laws and customers. Question. What is conflict of interest in banking? Answer. A conflict of interest occurs when a banker's personal interest interferes or appears to interfere with their professional duties and decision making. Question. Give an example of conflict of interest. Answer. Sanctioning a loan to a relative or recommending products for a personal benefit rather than customer suitability. How should a banker handle conflict of interest? Answer. By full disclosure, recusal from decision making, and strictly following bank policies and ethical guidelines. Question. What is insider trading and why is it unethical? Answer. Insider trading is using confidential information for personal financial gain. It is unethical as it violates fairness, trust, and legal standards. Question. What is meant by customer confidentiality? Answer. It is the obligation to protect customer information and disclose it only when legally required or with customer consent. Question. Can customer data be shared internally? Answer. Yes, only on a need to know basis for legitimate banking purposes and as per data protection policies. Question. What is whistleblowing? Answer. Whistleblowing is reporting unethical, illegal, or fraudulent practices within the organization through authorized channels. Question. Why is whistleblower protection important? Answer. It encourages ethical reporting without fear of retaliation, helping prevent fraud and protect organizational integrity. Question. How does ethics help in fraud prevention? Answer. Ethical culture promotes vigilance, accountability, and zero tolerance for wrongdoing, reducing opportunities for fraud. Question. What is meant by fair banking practices? Answer. Providing transparent, non-discriminatory, and customer-centric services while ensuring informed consent and grievance redressal. Question. How does mis-selling violate ethics? Answer. Mis-selling prioritizes targets over customer interest, causing financial harm and eroding trust. Question. What is professional conduct in banking? Answer. Maintaining discipline, courtesy, competence, confidentiality, and impartiality while performing official duties. Question. How should a banker behave under pressure to meet targets? Answer. Targets should be achieved ethically without compromising customer interest, rules, or integrity. What role does leadership play in ethical banking? Answer. Leaders set the ethical tone, act as role models, enforce discipline, and promote ethical decision making. Question. What is ethical dilemma? Give an example. Answer. An ethical dilemma occurs when choices conflict with moral principles. There is pressure to approve a loan despite weak creditworthiness. Question. How should ethical dilemmas be resolved? Answer. By referring to bank policies, laws, ethical codes, senior guidance, and prioritizing long-term institutional interest. Question. What is accountability in banking? Answer. Accountability means being answerable for decisions, actions, and outcomes, including errors or lapses. Question. What is transparency in banking operations? Answer. Transparency involves clear disclosure of terms, charges, risks, and decision-making processes. Question. How does lack of ethics impact a bank? Answer. It leads to fraud, regulatory penalties, loss of reputation, customer attrition, and systematic risk. Question. What is RBI's role in promoting ethical banking? Answer. RBI issues regulations, supervises banks, enforces compliance, and promotes governance and customer protection norms. Question. What is corporate governance in banks? Answer. Corporate governance is the framework, rules, practices, and processes ensuring accountability, fairness, and transparency. Question. Why is KYC ethically important? Answer. KYC prevents money laundering, terrorism financing, and misuse of banking channels. Question. Is accepting gifts from customers ethical? Answer. Generally no, except nominal gifts as per bank policy to avoid undue influence or favoritism. Question. What is ethical lending? Answer. Sanctioning loans based on genuine creditworthiness, proper appraisal, and intended use of funds. Question. How do NPAs relate to ethics? Answer. Many NPAs arise from poor appraisal, favoritism, or unethical practices, highlighting the need for integrity. Question. What is fiduciary responsibility of bankers? Answer. Bankers must act in the best interest of depositors and customers while safeguarding public funds. Question. What is moral hazard in banking? Answer. It refers to excessive risk taking when individuals believe they will not bear consequences of failure. Question. How can banks build an ethical culture? Answer. Through training, leadership, example, strict enforcement, ethical codes, and transparent systems. Question. What is code of conduct? Answer. A formal document outlining expected ethical behavior, responsibilities, and disciplinary measures. Question. Why is ethics training important? Answer. It sensitizes employees to ethical risks and improves decision making under pressure. Question. How does technology create ethical challenges? Answer. Data privacy risk, cyber fraud, algorithm bias, and misuse of digital platforms. Question. What is zero tolerance policy? Answer. A strict approach where unethical behavior is not ignored regardless of position or performance. How should a banker respond to unethical orders from seniors? Answer. Politely refuse, document concerns, follow escalation channels, and adhere to policy. Question. What is reputational risk? Answer. Risk of loss arising from negative public perceptions due to unethical actions. How does ethics support financial inclusion? Answer. By ensuring fair access, transparency, and protection of vulnerable customers. Question. What is customer fairness principle? Answer. Treating all customers equally without discrimination based on status, gender, or background. Question. Can ethical banking coexist with profitability? Answer. Yes. Ethical practices ensure sustainable profitability and long-term growth. Question. What is vigilance mechanism? Answer. A system to detect, prevent, and address corruption and misconduct. Question. How does ethics help in crisis management? Answers. Ethical decisions preserve trust and credibility. Ethical decisions preserve trust and credibility during financial or operational crisis. Question. What is data ethics in banking? Answer. Responsible use, storage, and sharing of customer data. Question. Why should bankers avoid favoritism? Answer. Favoritism undermines fairness, increases risk, and damages institutional credibility. Question. What is social responsibility of banks? Answer. Supporting economic development, inclusion, sustainability, and ethical financing. Question. What is ethical risk? Answer. Risk arising from unethical behavior leading to financial or reputational loss. Question. How do audits promote ethics? Answer. Audits ensure compliance, detect irregularities, and reinforce accountability. Question. What is ethical decision making framework? Answer. Identifying risk stakeholders, evaluating options, assessing consequences, and choosing lawful and moral action. Question. How should pro customer complaints be handled ethically? Answer. Promptly, fairly, transparently, and without bias. Question. What is integrity testing? Answer. Assessing honesty and ethical behavior through controls and monitoring. Question. Why is confidentiality critical in banking? Answer. It protects customer trust and legal compliance. Question. What is ethical sales culture? Answer. Sales driven by customer needs, not just targets. Question. How does ethics influence employee model? Answer. Strong ethics boost trust, motivation, and organizational loyalty. Question. What is long-term impact of ethical banking? Answer. Sustainable growth, reduced risk, strong reputation, and stakeholder confidence. Question. What is personal integrity? Answer. Consistency between values, words, and actions even under pressure. Question. How do ethics affect decision-making speed? Answer. Ethics may slow decisions initially but prevent costly errors later. Question. Can ethics be measured? Answer. Indirectly through compliance levels, complaints, and audit findings and employee behavior. What message should a banker give to juniors about ethics? Answer. Integrity is non-negotiable. Careers are built on trust, not shortcuts. Question. Online conclusions on ethics in banking. Answer. Ethics and integrity are the backbone of banking, ensuring trust, stability, and sustainable growth. Thank you very much for your patience. Request for like, subscribe, and share.